Good morning. It is last day of July, the 31st, Wednesday, about, what is it, 7:50 UTC? So a little bit before the London opens. Anyways, just want to go through the kind of the game plan, especially it being the big FOMC interest rate decision today. So we'll walk through Bitcoin and then we'll talk about game plan going into that major potential volatility event, which it generally is. So looking over at the heat map here, I'm looking at a little bit higher time frame. There is a lot of local liquidity shorts that are building, especially up towards about 68, 68.1, 68K, with bigger gaps above us at 69.5. Going all the way up to test that high structure would definitely be a potential short if we have the failure of these zones, as this low that we're creating now has technically broken some of that upside structure. To the downside, there's still a lot of short liquidity below us. I'm cautiously long from this higher low that we got this morning around 65.7. In case that's already at break even, in case we break and flip this bearishly, in which case we have to target lower towards 64, 64.5 into this area to retest that major structure. Looking over at just a general look at the alts real quick, just a touch on it. Locally, everything's pretty middling for the most part. There's a couple like Zens at Render that are a bit oversold. Kaz and Riff are a little bit overbought, but generally speaking, you're middling for the altcoins right now. The big plan here, of course, is looking at the time. So I'm on Universal Time Coordinated, 18 UTC today. That is the expected interest rate. There's no real expectations of the increasing it. Basically, a decrease, anything other than forecasted, is going to cause even more volatility. So let's say they lower interest rates by 0.25%, which is 25 basis points. Then that would probably constitute an instant market correction upwards. So we'll see how that plays out in the long term. But other than that, a couple big points, CPI is coming out here as well for the Eurozone. In any case, the most important thing that we want to kind of realize today is that being a major volatility event, it's always a decent idea if you're not already in a position that's in profit to size down if you're taking localized positions, because the volatility created by this, event really is almost always a big up and down candle just to break local high leverage positions. The most important thing here, the forecast is as expected, but also half an hour after that, the FOMC press conference. Powell may start to indicate the potential for reducing interest rates, which again, him even, speaking that they might do it in the next cycle, the next session, would definitely have a market effect. So with that being said, let's go look at the charts. Looking at trading light at the bottom, I'm just showing open interest in this zone. Locally, we're seeing some stuff stepping in. We saw quite a bit stepping in into the afternoon and evening, early morning hours last night to hold that kind of higher low price structure, which we are getting. 65.7, 65.8. This is definitely the low that matters. Any lows under this low, we're likely looking for that continuation down as the local stuff has kind of been pulled. Like I said, cautiously long in this area just because it's a nice retest of level. And there is some stacking liquidity all the way up above us. So again, we're starting to see that kind of round bottoming structure playing out quite a bit. Open interest is back down at levels we haven't seen since, I guess, since, the lows that we did at 64K. So that's good. That's pretty positive as far as I'm concerned. We're looking to create some higher lows. The real level to gain above, of course, still remains at 67K locally because of all the resting liquidity there. Looking at some of the resting order, or excuse me, the order flow of what we've actually had entered in this area, still primarily shorting by large chunks. We're above that right now. These are kind of out of position. We want to make sure we reestablish support above 66K here locally, and then have a stab towards 67K. Now at 67K is when we start getting interesting. There's still lots of short orders, especially in the last couple of days. Since Monday, that are still going unpunished, with quite a bit of it coming in from that nuke on Monday. So that's the expectation, is like we're looking here for a hold of 66K for potential push higher. If we do a dip down to 65.8, that's not the end of the world. It's closing underneath this structure is where we now start putting all the longs that are in place here out of position. If we leg down first, likely going to be the first major bounce from whatever low we create. but we're, optimistically long here just locally in case we hold the position, break even from 65.7 in case we get that kind of push higher to start taking out 67K. So looking at the plan for trading view, general in this area, yes, the play down from yesterday played out very nicely. We had the failure, at that level at 66.9 really tested, and then even, local, lower time frame, we actually had the perfect retest failure. Beautiful continuation of the downside for that entire structure to play out. We also get a secondary test of the daily open, which is a failure of the failure, which is even more confluence for that local downside. So that's mostly done at this point, for optimistically looking for that long. And it's very simple. The low here, we don't want to start closing underneath these lows, obviously, but any lows that start breaking and bearish or retesting below that 65.5, we are looking for that continuation push back down towards 64.3, 64.4, 64.5, retesting the real low structure. If we do that now, my expectation is that we have a significant bounce instead of just breaking right through it to the downside. If you just dump through it to the downside, you'll probably see something insane like a 7 or 8K daily candle. And like I said, this area here gaining 66.9, 67K, that's the more significant gain that puts all of these shorts that were entered from Monday in the big dump out of position. So that's the real major gain that gets us an attack to go back to 68.2. The 68.2, because we've made this low structure, we are still looking for that kind of downside rejection, potentially back to retest these lows. If we have that continuation move, and based on liquidity, there's definitely enough liquidity and shorts just from this local structure to break us back up to the total highs for that retest. And yeah, the expectation is very simple. If we do start gaining and continuing, that's the first potential major short. Anything that gains levels, remember, we're taking profit. We're taking our profit targets, as prices accelerating up or down. So the expectation here is very simple. We should see a failure, at least at the major resistance. Any breakthroughs of these highs, very likely to start seeing, having the new all-time high conversation. But yeah, watch that. Watch the times as well. We're looking at 20 my time, 18 UTC. This is when that FOMC statement is going to happen. Just be cautious of entering really local positions when that massive volatility comes in, as it's oftentimes it creates a lot of volatility up and down to shake out high leverage positions. So kind of waiting for that to settle. And historically, after we get these FOMC announcements, usually the low that follows the FOMC announcement is usually the local low that comes in. So we'll see how that plays out. Optimistically long here. We'll play the levels and trade your plan. Peace out.